For more on what's at stake and what's possible, I'm joined now by Dan Gorenstein. He's executive editor of Tradeoffs and former senior healthcare reporter for PBS's Marketplace. Great to have you on. Thanks so much for speaking with us here. So we heard there the president says he can get insurers to cut prices by incredible amounts with, one meeting. You've been talking to insurance companies that might actually be in the room. What are the chances they just kind of smile, nod, and then go home and do nothing?
Good morning, Kim. Thanks so much for having me on. I really appreciate it. The chances that they are going to smile, nod, and tell the president in a polite way to go pound sand is extremely low. What's more likely is that they're going to come in there and they're going to look for a way to get what they want and make the president look good. I think the first thing they'll say, Kim, to the president is, look, if you want to lower prices for people fast and bring some real meaningful relief, then extend these enhanced subsidies, and people will see their premiums on average shrink by about $1,000 a year, and that would be a real win. I think they'll also go in there and they'll say, look, President, we would love to have a conversation with you about how we can really control drug costs. This is not something that's going to be done in a day or a week or 2 weeks. This is going to be done over a series of serious conversations.
Okay, but, they would like those subsidies, but President Trump, instead of giving the money to the insurers with those subsidies, President Trump is proposing another plan. Listen to this.
All of the billions and billions, ultimately trillions and trillions of dollars that's paid to these companies, we're going to pay directly to the people.
All right. So can you walk us through, how that would work for regular people shopping for coverage?
Sure. So there's an idea out there that I spoke with one of the insurers who may end up being in the room here, and he was outlining this to me. So there's this idea that you could extend the enhanced subsidies, and rather than the subsidies going directly to the insurers, the enhanced portion of the subsidies would go directly to the consumer in a HSA, a so-called HSA account, a health savings account, right? And that money, that cash money, could be used to lower the premium. So you could level up. You could go from a silver plan to a gold plan. You could use that money to use for out-of-pocket costs. And I think that's an idea that could have some real traction for the insurers. It could make the president look good, and it could be a way to sort of thread a needle. It might be, honestly, Kim, a little bit more smoke and mirrors than anything that's a meaningful reform, but it seems like it's plausible.
Plausible. What are the pitfalls of a plan like that? Because it sounds great on its surface. We get to keep the money. We don't, we cut out the middleman, but it might not be quite so easy.
Yeah, no, I think that's fair. I think the pitfall, I've talking to a range of people about this yesterday. It depends on how it's done. It depends on the details of this. What could that money go for? There's some talk, there's some concern that you could only have that HSA money if you went into a so-called lower tier plan, a skimpier plan, a bronze plan that would have higher deductibles, that offer less protection in medical catastrophes. And so if that were to happen, people would end up being potentially very exposed to healthcare costs that might not work very well for them.
You talk about people being exposed. I want to ask you about some people that you've actually spoken with. A woman named Nance, I understand, who's been wrestling with whether she can actually afford to keep her insurance. Briefly, what's her situation? What does she kind of represent about the millions of people who are facing this decision right now?
Yeah, thanks so much for asking. Nancy is a small business owner. She's in Virginia. She's a mediator. She's had insurance off and on for years. At one point, she didn't have insurance, and she got mugged when living in New York. And when the police arrived, they said, we'll call you the ambulance. And she begged them not to call the ambulance. I cannot afford the ambulance. This is somebody who's, has just had this terrible thing. So that gives you a sense of how important insurance can be. But then ultimately she decided to get insurance, and she gave me this quote. Forgive me, I'm going to read it to you quick, Kim, real quick. She said, I see what happened to my cousins. Two of them had breast cancer simultaneously. One was insured, one wasn't. One is with us, one is not. And the frightening thing about that is, as I age, I know that that's a bigger risk every year. When we talk about these premiums going up, starting in 2021, 2026, Kim, we're talking about some 4 million people that are going to lose their coverage. And I think it's really important to know, for folks to know, that the literature is pretty clear that when they don't have insurance, they delay or forego needed care and end up in worse health. Some people will die sooner than they need to. And people are also more likely to face medical debt or bankruptcy. And at the same time, people still get sick, even if they're uninsured, and someone has to pick up the cost. And that affects all of us.
These are real people's lives, as you say, so much at stake. We'll see what, if anything, comes from the president's efforts to try and address this. Dan Gorenstein, really appreciate your take on this. Thanks so much.
Kim, thank you so much. Have a good day.
You too.